there's a relationship and an understanding, something that we kind of know about it that makes a bit of sense. The idea that we can recognize where we should be going with a trade at any particular time allows us to make some easy trades or some fading opportunities. You know, when we look at something like wheat, the most commonly referenced pair is of course corn. The wheat-corn spread is a very, very well-known spread in the world of commodities. Divergences do appear, and when divergences appear, there's a very, very obvious trade. Now, the one thing of it that you probably maybe don't understand or appreciate about agriculturals is there's a very similar kind of form about agriculturals that happens, you know, pretty much all the time, and it's always around about the cash open. I don't know if anybody's ever been familiar with ags, but it, you know, into the likes of the cash open, 1 o'clock, 1:30, 2 o'clock London time, we normally get a very, very big surge in volatility after a very quiet pre-session. So if the pre-session has been bearish, generally as a rule, that's one of the easy trades in the world, is to buy commodities, the likes of the wheat market. If we take a look at some of the interesting formations, you'll see that formation appears very, very clearly here during February. You can see that the spreads are quite clearly bullish. The market comes into the US Open, and then all of a sudden, look at what happens. All of a sudden, we hit 12:30, 1 o'clock, and then boom, big profit. Then the same happens again the next day. As soon as the big profit comes in, it sinks. The next day, the same thing happens at 1 o'clock again. You can see coming into 1 o'clock, where the running stops, running bottom edges, boom, another big profit. Same thing happens the next day. They take it into bottom edges. 1 o'clock happens, boom, big profits happen. Now, one of the things that you'll probably notice, you might be saying, so why have you stopped on the right-hand edge here? Well, what I've got here is I've got the spreads. Let me run through the spreads for you. The black line spread is wheat, corn 2, and we go through the spreads between that one. So we go wheat, corn 2, wheat, corn 1.5, wheat, corn, wheat 1.5, corn. Okay, so that's the spread that we've got on the screens. What I want you to pay attention to, of course, is this blue line rising. As the blue line rises, it's going to be probable that you're going to be able to buy into that discounted price area. You see the blue line rising. There's a very, very good chance that the cash open, the US session, is going to be bullish. It's ready to go. Blue line rises likewise for this one as well. And when we come into this one here, of course, blue line is, of course, rising. So you get this crazy obvious trade that you're setting up in these areas for your wheat storyline. And you can see that there's 2 occasions that they run it back down very, very aggressively for the liquidity, and then they take it bid. Run it back down aggressively for liquidity, then they take it bid. Now, take a look at the right-hand side on this occasion. Take a look at what the blue line isn't doing in here. And then all of a sudden, the market just collapses, right? So the blue line has to be moving, or there's a problem, right? The blue line has to be moving, or there's a problem. When we get into the evening session, you can see the blue line is starting to finally move. And obviously, the market hasn't got anywhere to go now. Now, one of the problems you've got is that on the big macro chart, if you don't like going for the big volume swings, the best thing you can ever do is recognize the relationship of black over blue. So long as you don't mind going for the big swinging narratives, these are the easy press type trades. So you can see in here, for example, black is quite clearly now diverging against blue. So the best and easiest trade is to actually just go for the press. Take the market sell side when you see that narrative forming. It's very similar to your oil skews. When they go in opposite directions, life becomes that little bit easier to trade into, don't they? When they go in opposite directions. That's if they go in opposite directions, of course. So you can see, for example, in here, you'll see how the bubble skew starts to appear here. You see that bubble skew? Now, it doesn't look as if there's a lot of room left, and there isn't, but bearing in mind this is a 30-minute chart, so on the basis that this is still a 30-minute chart, there's still a fair amount of profit to be made from that as a bubble skew. So you can see the bubble skew forming in there. You're now recognizing that that is a real thing. And obviously, you're still got a bit of range there to make some money over the next hour and a half or thereabouts. Nice and easy, nice and squeezy. So this is one of the things we start recognizing so long as we are in the right part of the charts at that time. You'll see another bubble skew just in here. You'll see the bubble skew starts to form in here. It runs a stop before it sells off, but again, it's that easy low volume area where the bubble skews become very obvious, and you make some very, very nice money. And then you get lucky on this one because that's the one that in the overnight session you get the big drop from. So when you see these ideas, you start recognizing, first of all, the divergence, which means that you're buying this low edge. Then you're checking to see if the black line is massively overpriced. And then you're looking for the bubble skew reversal. You can see here's the divergence. The black line is massively overpriced, and there's the reversal comes in almost straight away. So when you're looking at these charts, you'll start to see, if we zoom out a little bit, you'll start to see that black line relationship changing to the blue line relationship. So if we go back to the big rally phase here on this market, you'll see that if we zoom back out a little bit here, you see the difference? You see how the order is very, very bullish. Look, see how the black line is discounted to the blue lines. The black line, remember, is W minus C times 2, whereas the blue line is W times 1.5 minus C. So you get that idea that wheat minus corn versus wheat. So when this line is discounted like this and price is now moving, this is probably going to be bullish now for the big US market session opens. So you're in this type of environment, you're predominantly looking to get long for 1 o'clock each and every single day. So you're looking to get long for 1 o'clock here, boom, you get a big pop to the upside. You're looking to get long for 1 o'clock here, boom, you get a big pop to the upside. You're looking to get long at 1 o'clock here, boom, you get a big pop to the upside. You can see that that relationship stays in place for the entire move higher. And then, of course, what starts to happen? Well, they start to become pretty fair. The black line's making higher highs, the blue line's making higher highs as well. It's now almost a fair market facility at the top edge here for possible sell reversals. You can see that if we zoom into that, you start seeing a small divergence on the sell side starting to show up for the 1 o'clock sell coming in. When we zoom out again, we can obviously get that better picture, that better, bigger picture narrative. It becomes very clear when you zoom out. So when you're looking at these stories, you can see just how bearish wheat is during this phase. The divergence on the black line, blue line is ridiculous. And the idea of getting short wheat, to me, seems to be an absolute no-brainer at that stage. And sure enough, wheat was able to make a nice progression to the downside. Now, what happened in here? Well, look at the shape of the blue lines. They're all turning up. The black line is staying flat. So if we were to zoom into this phase here, you'll see that the black line relationship actually is quite heavily discounted now, suggesting that this has genuine upside potential. And obviously what happened with that was that we got this enormous buy side pop on wheat. Made an absolute killing on that trade into that storyline, didn't you? So if they're just doing the same thing, and you've got to be mindful of the fact that sometimes you've got to zoom in, you've got to zoom out to try and get the bigger context. But sometimes the bigger context, it's so easy to see the bigger context. The black line's are way up here, the blue line's are way down here. This is almost definitely still a sell trade, isn't it? And you go short and you're likely to make a lot of monies. So zooming in and out of these as narratives, you can see the black line is now lagging behind the move, suggesting that wheat should be a short sell. It stayed in a short sell quite nicely. Got a nice bounce, but the black line still dominating the top edges, still a short sell. And you can see that wheat continued to sell over the next few days, right through January. So let's zoom out a little bit and see if we start seeing when it starts to change. When does the relationship start to change? Well, obviously, it's not at first blush easy to spot, but when we start zooming more in, you start seeing something changing at the bottom edges, don't you see that? When you start zooming in, you'll see that the blue line is almost flat, whereas the black line is quite discounted, suggesting that there's maybe more buy-side pop on this market than perhaps you maybe had originally thought. So the black line again into these areas, this idea of recognizing this story, pretty obvious when you zoom in and zoom out of these charts, and then you get used to just getting into that as a habit. As you zoom back in, black over blue, this market should be selling off. Black over blue, this market should be selling off. And then just at the cash open, you can see obviously it flips. Just at the cash open, it flips. You can see the black line, blue line relationship changes in here. And obviously that black over blue becomes blue over black, and we should be long for the cash open. And then boom, you make the big monies at the cash open. Into the cash open, you can see black goes over blue. We should be start working back into the short sale on wheat, and down the price goes. This is a sell market on wheat as we go through February, and sure enough, that sell market on wheat as we go through February, big sell off on wheat. So you can see that this storyline, and this is the best way to spend time with the relationship. Well, it's the best way I can spend time with a relationship, that's for sure. It's more fun. But anyway, this is the kind of way you want to spend your time. Going backwards and forwards sounds as like it's a repeating, never-ending argument, as the buyers and the sellers, compare notes to try and figure out what the hell side we should be on here. But I think it's pretty easy. But you've just got to get into the habit. See this context button, Paul? This context button is worth billions of dollars on your trading account. Literally billions of dollars. I wish people would just bloody well use it. I'm fed up saying, but what is the bigger picture? What is the bigger picture? Did you get that bigger level? Everybody's way too short term. Way too short term, guys. Especially ag traders, absolutely, especially ag traders, because you want to get that bigger picture narrative. This is not a scalp trade, but you can see it is the black line premium to the blue line, yes or no? Every time the black line ends up premium to the blue line, doesn't it? So yes, they run it up to sell it. They run it up to sell it. But the macro in this is almost a given that that's a big sell coming in. And look at the drop you had on wheat. 601 down to 560. $40 drop on that wheat trade was enormous, right? Absolutely enormous. The bigger the spread, and there's an enormous spread in here, the bigger the drop. So when we recognize that that's the case, you recognize the changes taking place in certain locations at certain times. There was a big reversal coming in. It was kind of fair value. If we zoom into the reversal itself, you'll notice that the black line, which was well above the price still at that stage, they both converge very clearly here. But look at the bottom edge. Do you see the bubble forming on the buy side? You see the bubble forming on the buy side? And then off she goes, off she trots to the upside. Look at that, guys. Look at that for wheat. Unbelievable, I hear you say. What a sensation for a buy trade and wheat right through that phase. Crazy, crazy, crazy. So we start watching for these as stories. You start looking at these as possible spread ideas. You could, as I said, zoom in, zoom out, get the basic storyline clear. If it's not 100% sure, you can see quite clearly black line is not moving. This should be a buy trade for the never-ending buy trade should be available to us here. The never-ending buy trade should be available to us in here. And sure enough, just buying wheat on these dips into these bottom edge areas, very, very high probability trades. And either they're going to be at the cash open at 1 o'clock, or they're going to be around about this price area here, which is about 3 o'clock, 4 o'clock. It's either or, because they are the two areas where they run manipulation most. Catch up to the right-hand edge, and you'll see that wheat has been on a charge. So you can see that as we zoom into this trade narrative here, you can see that wheat's been on a charge. You can see the black line's hardly made a higher high. This was very, very bullish for wheat here. You see it? This was very bullish for wheat here as well. Do you see that? Very bullish for wheat. Started to drop down. This started to rise. You want to get into that trade there, and you want to take that wheat price bid. Should make a lot of money on that trade. Should make a lot of cash on it. And obviously the wheat trade annihilated the top side. But again, look at how bullish this was in here. See how bullish that is there? This should go straight north. It does go straight north. You make a killing on wheat again at that stage. Now, this one kind of flips round. You can see that this started to flip round. The blue line was now starting to diverge at that stage. You know, so if you look at that phase there, you'll see that the blue line is starting to diverge. The black line is continuing up. You're thinking to yourself, 650, sell side wheat, 650, sell side wheat drops down beautifully to 630, which is pretty good. Now, this still looks bearish. You know, this still looks bearish, but obviously it's on the wrong side of the narrative at the moment. You know, you want to try and get this. So if we're going to buy wheat, you know, if we want to get into this as a bit of buy side wheat, we want that wheat price down into the bottom edges. You know, like this still looks like a buy on wheat, but what are we at the top edges? So what are we supposed to do with that? We want to get it into bottom edges. We want to see that change around. So in the top edges, we want to see it turning into a sell. How do we see it turning into a sell? Well, the blue line has to change. There has to be a complete, easy to recognize change in the blue line narrative. You can see the blue line narrative is now changing. The black line is now clearly, distinctly above the blue lines. Let's get selling now on these big candles up. And obviously that sell there took us from 670s to 650s. A very, very nice trade. Now, nothing much for this one. The blue line's going up a little bit faster than the black line. You can see that if we zoom into the trade. You'll see the blue line, black line relationship pretty much static, pretty much in line with each other. They're both pretty much the same pace, pretty much for the entire move. There's very little bubble. A bit of a buy-side bubble forms in this balance. And sure enough, the price does continue to go a little bit higher after that as well. And that's us on the right-hand edge. So on the right-hand edge, again, zoom out, zoom in, look at the shapes, look at the candles. You can see here the black line went up, the blue line went down. You're probably going to be selling wheat if you can get a good price on that candle on an individual candle basis. And at the moment, you're probably going to be looking to try and buy a discount on wheat into the US Ags Open today. So you'll be looking to try and get that. But I'd like to get that discount because at the moment, of course, the price is trading at a premium to the blue line. I would like the price to be trading at a discount to the blue line in line with the black line narrative. So I'd like to get that little bit more of a discount into the bottom edges, and then we can pick up some wheat into that, into these, maybe these pin rejections here. Now, obviously, in line with that, one of the things that we have to understand about the commodities is that, that they are nearly always based around the basis trade. So the basis trade, of course, very, very straightforward. It's just your calendar spreads out for as long as you possibly can get them to go out for. Taking them out to December, we want to make sure the calendar spread is with us. Is the calendar spread with us for this buy trade, yes or no? Absolutely. In fact, the calendar spread was very, very good for this buy trade in here, wasn't it? So the calendar spread must be part of this, must be part of this storyline. The basis trade on commodities is incredible. That calendar there shows demand, real-time demand, not lagging demand, not 20 candle look-back demand, real demand for wheat. And obviously, because there's real demand for wheat, we should be able to make a very, very easy buy-side play into that real-time demand for wheat. And if we can get the black line above us, and obviously as we go into the other black line itself, we can start to look at the black line below us. And the idea, of course, is that we see the two things lining up. It's time to get busy. So the idea of getting the right trade at the right price, trying to find that narrative lining up for us, probably not lost on anybody. I think it's quite a clear storyline. And, you know, if the storyline is clear, you know, we really, really want to make sure we're playing. And as I said, putting the two pieces stacked in the right place at the right time. it's very, very difficult to get your wheat trade wrong on these ones. You can also add in the calendar spread for corn as well if you want to add in that narrative. It's always good to see that there is nothing really acting against us. And obviously that can create a little bit of a problem at times. You can see just now, this is one of the reasons why perhaps we're getting some discounts, because the overall shape of agricultural basis is quite bearish. I'll give you an example of a perfectly bullish one. You can see in here that corn goes bid and then wheat goes bid, and we still had half an hour to buy it, Paul, on Friday. Still had half an hour to buy it. Now, that was at the close. A lot of people aren't going to take that trade because you've got a weekend risk on the Yags. But I think with the basis trade as bullish as it is, I think your chances of making any losses on that trade are pretty close to zero. The basis trade on that trade was huge. And if you get the basis trade right and you get the price right, you're not going to lose money on ags. It's like this sell trade here. You're not going to lose on that sell trade. Look, the two bases are both going sell side. The chances of you getting that trade wrong and losing money on wheat, very, very, very slim. It's like oil. If you get the swap dealers on gasoline bid and you get the swap dealers on oil bid, and you've got a discount on oil prices, the chances of you making a loss on that oil trade are almost zero, right? But obviously it's about tying those and still getting that price. Well, it doesn't happen very often, but it happened there. And it happened there. So, it does happen. It's just about getting it. But, that trade was on the 20th at 1900 hours. This trade here was on the 21st at 2:30 in the morning. It is what it is. But obviously, if you'd got that little sell trade, made some really nice money before the basis turned back up here on wheat. And obviously, at the present moment, we've got a difference of opinion between these two products, which is why we're a little bit less excited about this as a bit of a trade here. So I don't know if that'll answer Nick's question, but I suppose all you can do is try, see if he likes what he sees, and if not, you can always look at it again and